Thank you for stopping to watch my video. I want to teach this to as many people as people because I want to teach you something most few people don't know what they know about this. So we're going to start off with 3 questions. While we're going through these questions, I want to make sure you have pen and paper. First question, do you want to leave a legacy for future generations? Second question, do you want to save taxes year after year, generations after generations? Number 3, do you want to know the secret of the rich? If you answered yes to all 3 questions, this is the right place to be. The Spendthrift Trust is legal. It's in the IRS Tax Code 643B. It's been in front of the United States Supreme Court on 2 separate occasions, and both times the Supreme Court has favored it. I work for the law firm that has a copyright on the Benson Financial Trust. Paul Benson was a Harvard law professor. 76 years ago, he wrote 5 different trusts that save very specific taxes. You are not tax-free, but you're going to save very specific taxes. So let's get into this. The history of the Spendthrift Trust. It comes from England way back when King Henry VIII, that famous king who chopped off his wives' heads, started the Church of England so he could divorce them. Hey, murder a few ladies, now divorce them. He went to go tax the lords and ladies of England, and they went further back to the Magna Carta, and they said, no, King Henry VIII, you can't do this. It's contract law that came to the colonies while we're still part of England. The law firm I work on behalf of inherited a trust that turned 350 years old in 2023. It's been around for that long, 3.5 centuries. Our current tax code went into effect November of 2011 and was only supposed to be around for a few years. Then World War I happened. So now, 111 years later, the only thing it's done is grown and grown and grown and grown. So the super rich families of 1911, the DuPonts, the Carnegies, the Kennedys, and the Rockefellers made sure they could save taxes. Well, if they can save taxes, we can save taxes. So my personal story, so you have it. Back in 2019, I was working full-time as a Medicare broker in Phoenix, Arizona, and I wholesaled 7 bank-owned properties nationwide. Woohoo! Sally was a rock star in her real estate group, and I paid off $184,000 in debt. Congratulations to me. Completely tax-free, completely debt-free. And April 2020, my CPA called me and said, Sally, I have some bad news for you. Your tax bracket went from 22% taxes to 24% tax bracket. If you don't realize this, there are 7 different tax brackets in the IRS Tax Code, from 10% to 37%, and 4 ways to file your taxes. All of a sudden, I had set aside $50,000 to pay for my short-term capital gains because I knew about capital gains. All of a sudden, I owed the federal government $97,000 in short-term capital gains. Yikes. Remember, it's April of 2020, and COVID had just started. Who knew what was going to happen in the rest of the world? So what my solution was, I took a HELOC out of my paid-off house, defeats the purpose of being paid off, to pay for my tax bill. And I spent the next 5 months researching the Spendthrift Trust. I had read an article about the Rockefellers Spendthrift Trust. It's called The Office. It's 7 generations old and has almost 400 people under the same EIN number. If they can have the trust, I wanted to know about the trust. So in September of 2020, I started both my business trust and my beneficial trust from the law firm and said, I want to teach this in my real estate group. If I can save capital gains and interest income and rental income taxes, other people need to know about this. So let's get into this. The business trust is for U.S. business owners, entrepreneurs, and 1099 income earners. You will save at least 90% on your federal income taxes in all states in Puerto Rico. And then, as I nearly dropped the phone. And in 43 states, you will no longer pay state income taxes. Personally, in 2022 and 2023, I saved 92% on my federal income taxes. I only paid 8%, and I did not pay North Carolina taxes. My clients are saving thousands of dollars. I have a free class. It's my name, www.sallygimmon.com. It's on the Great Discovery. When you go out there, it's a 23-minute video with slides. There's 3 articles from Forbes magazine. There's 2 pages of case law. And there's a chart that is showing you that if you're making $80,000 a year gross, you will be saving 5 figures in taxes in all 50 states. 7 states don't have state income taxes, so you save a little bit less than that. But again, if you're making $80,000, you should be looking at the Spendthrift Trust. With the money you save, you could use this to pay off your mortgage, buy a new car, take your family on vacation, give to a charity, save for retirement. It's your money. You're going to set up, you'll get a new EIN or employee identification number. You'll set up a new bank account, and the receivables will go through the bank account, and the deductibles will go through that bank account. You will file a 1041 tax return. We introduce you to the correct CPA who knows how to do this. And part of the fee for getting the trust, we will pay for your first year's 1041 tax return. It's a deal. That's the business trust. The beneficial trust is for all investors. I don't care what kind of investing you're doing. You might be a forex investor. You might be a real estate investor. You might be in the stock market. You might be doing crypto. You might be doing options trading, whatever you're doing. The beneficial trust is going to save the following 5 taxes year after year, generation after generation. You will no longer pay short-term or long-term capital gains. Short-term capital gains are a year or less and are between 10% to 37% like all other taxes. Long-term capital gains are either 15 or 20% and are a year or more. So if you're selling your business, selling an investment property, or selling crypto, there is past laws. It hasn't gone into effect yet, but there's past legislation saying they're going to raise capital gains to 40%. Could you imagine? You make $100,000, you make $100,000 in profit on something, and you pay $40,000 to the federal government. That's insane. The second tax you'll save is interest income taxes. This is if you're a passive investor, if you are in mutual funds, if you are doing subject to real estate, the BRRRR strategy. I personally have 12 notes where I'm the paper on the house. People pay me their mortgage. It's Bank of Sally, not the Bank of America. If you're doing subject to real estate, if you're doing creative financing, that's all interest income taxes. Again, tax between 10% to 37% depending on your tax bracket. You will no longer pay dividend income taxes. So if you are in the stock market, if you're a day trader, if you are doing options trading, if you're doing commodities trading or futures trading. I know what you're all thinking, hey, if I'm a forex investor, what happens to me? Forex investors get taxed twice, interest income taxes and capital gains, not dividend income taxes. The fourth tax you'll save is rental income taxes. If you have short-term rentals like Airbnb, vacation rentals, 5 doors, 10 doors, 15 doors, 20 doors, multifamily real estate, apartment investing, or if you're doing commercial property or arbitrage. Yes, you can take depreciation. Yes, you can do cost averaging, but I have not gotten over the other benefits. I'll do that in just a minute. And the fifth tax you'll save is royalty income taxes. If you're an author, an artist, an actor, an actress, if you are in the NFT world, maybe you have patents, maybe you have copyrighted information, you could be saving thousands of dollars. Now, Paul Benson wrote 5 different trusts. Those are the 2 main trusts I talk about. And no matter what trust you get, you're going to save the following 4 ways. You're going to save taxes year after year, generation after generation. You're going to keep your information completely private. There's a false rumor out there that your LLC or S Corp does this. I can go to the Secretary of State or the Corporation Commission website and research any LLC, S Corp, or C Corp. And there's a reason why 40% of all LLCs get sued every single year. Yikes. With the Spendthrift Trust, that doesn't happen. All lawsuits become frivolous. That's the third way. All lawsuits become frivolous because all your assets are in the Spendthrift Trust. You can't sue the Spendthrift Trust. If someone tries to sue me, I'd say, I'm sorry, but you can't get blood from a stone. And the fourth way you're going to save is you won't have to do the paperwork for the 2024 Corporate Transparency Act from the Treasury Department. If you do not get the trust, please do the paperwork because the fines are astronomical, $10,000 and or 2 years in jail for not doing the paperwork. Again, I want to help as many U.S. business owners, entrepreneurs, U.S. 1099 income earners, and U.S. investors save as much money as they can in taxes. Please go out to my free class, www.sallygimmon.com, to find out more about the Spendthrift Trust. My contact information is going to be there. Set up a 30-minute tax breakthrough session with me and see how much you could be saving every single year. Thank you for watching my video. I hope you've learned something new. Have a beautiful day. Bye-bye.